capacity, meaning where you plug your miners in, and compute, which is the mining rigs. The mining rigs it's been a glut market. People are still able to buy miners. All of the big three miners, we all have orders with locked in pricing, locked in supply well into the future. Capital for the public miners has been easy to raise. The private miners have had a harder time still because there's no equipment lending like there used to be in the raw days. You could go to Galaxy, you could go to NYDIG, you could collateralize these machines. You can't do that anymore. So that favors the people who have access to capital. But capacity is a constraint, right? So there's a lot of orders out there. People have a lot of machines on order, and now they're scrambling to kind of find places to plug those in. So the actual hash rate increase will lag, but with the Bitcoin at these levels, what you're seeing is, many miners, not Marathon, but many miners are selling every Bitcoin they generate because they just don't know when the shoe's going to drop. And because they don't have access to credit lines or the public markets, they're having to sell. So, I think we're even seeing some old mining wallets. There was a note somebody wrote, a 10-year-old wallet,
Yeah, 2010 wallet sent 1,000 Bitcoins last Tuesday, right when it hit an all-time high and sold effectively.
Yeah.
And miners or MicroStrategy or Coinbase or any of these proxies effectively for a spot ETF that they would rotate into the spot ETF once it was approved.
Yeah. So, may you live in interesting times, as the proverb goes.
So do you think that we're going to see sort of one of these mass extinction events post-halving of, a culling of the weaker companies and the individual miners and sort of a further consolidation into the larger companies? Or do you think that the high price could fix that or save them?
I think it's just putting an inevitability, pushing it out a little bit further out. This allows miners to continue to mine. You still have a large percentage of the mining fleets that are S19 Pro or older. Those machines are profitable at a hash rate. At that point, volatility will change, and we may see a decrease.
So last time we spoke, I believe you guys were almost ready in Abu Dhabi. I believe that has come online since, correct? And that is the largest mining facility on the planet. Is that correct? So talk about that coming online, how that's affected you, and then I guess future plans to continue to scale at that level.
Yeah, so we think of our business as kind of in three buckets today. You have utility scale mining, where what we're doing is we're like the Abu Dhabi project, like what we do in West Texas. We have hundreds of megawatts, which we are able to curtail whenever the utility needs it as a part of a demand response mechanism. And these are projects where you're helping the grid load balance. And that, if you look in the United States today, miners are beginning to compete with AI companies. The Googles, the Amazons of the world right now, they're looking for access to reliable power. It has to be available 24/7 and a high-speed internet connection. And so we're very proactively going out. And we've gotten actually quite a lot of very positive support from the Foreign Commercial Services arm of the U.S. government, where they are obviously very interested in fomenting U.S. inbound investment into African nations because of the China competitive threat. So that's been very good. We will expand in Latin America as well. And we're expanding our Abu Dhabi facility with additional hash rate. And so we're going to continue to see all these things growing. And based on the pipeline of machines that we announced on our earnings call, we have the ability to get to about 70 exahash just based on what we have coming in,
which is incredible. It sounds like you guys are taking over the world. Interestingly, I mean, you're talking about Africa. It seemed wildly underreported recently that Ethiopia, I believe, is mining Bitcoin, correct? I think in the past there was reports Bahrain. I don't want to say the wrong country, but I believe Bahrain. We know that Qatar now is meeting with Nayib Bukele.
As a way to hold a certain amount of reserves. There's a lot of testing going on. You got to realize that with only 21 million Bitcoin and the actual trading venues for Bitcoin are fairly limited still. You have Binance outside of the US, which is the biggest exchange. You have Coinbase in the US, Gemini, et cetera. If you're a sovereign and you happen to be sitting on 10,000 Bitcoin and you happen to need to go buy a battleship or something, these are large chunks of Bitcoin that may or may not go on and off the market. So I think people are a little wary. They're going to want to test. I've certainly seen some stress testing going on some of the ETFs. There were some hedge funds that were doing high velocity tests. 10x the volume. Does it work or doesn't it? And it seemed to work fine. So I think this is a developing market. The demand is going to continue to develop, but it's going to be very volatile.
When you talk about sovereign nations adding Bitcoin to their central bank, effectively, the few people who are telling the mining story are not including that part to secure the network. How much have ordinals and BRC20 tokens and all of this other activity now happening on Bitcoin alleviated that fear?
I think there was great proof last year. In May, we had a big bump with ordinals the first time around. Transaction fees ran up over the block reward. So in other words, transaction fees exceeded 6 Bitcoin in a block, in addition to the 6.25 Bitcoin that the subsidy was. In December, we had another month where that happened. We were mining some blocks that had over 7 Bitcoin per block in transaction fees. What you've now see is kind of the interest has abated. Transaction fees have come down. They're still much higher than historical numbers, but they're not as high as they were in May and December. But we recently launched, for example, a product called Slipstream. This is a block reservation system. So, imagine all these financial institutions who are trading Bitcoin. Traditionally, you put your transaction in the mempool, you pay a fee to try and prioritize that further up in the queue, if you would. With our reservation system, people can now essentially reserve space, almost like which means more transaction fees, which means more revenues for miners, more reason to keep the blockchain secure.
A year ago, we were using more electricity than the country of Argentina, and we were boiling the oceans, and Seneca Lake in New York was on fire. Seems like the environmental attacks have subsided. I mean, not from the Elizabeth Warrens of the world and such, although she's moved on to false stories about terrorist financing instead. Have you noticed at all that there's a little bit less criticism about the environmental impact of Bitcoin, or are we just not hearing about it as much on our end?
I think the power argument has academically been proven to be false regarding that you add Bitcoin mining, more fossil fuel comes online. So that narrative's been debunked. Are there places where Bitcoin miners are competing for energy with other people? Yeah, it's when the AI guys come in. I think the AI is going to use much more power than the Bitcoin mining industry globally uses, and it's going to use many factors of magnitude more. And the problem is they need
cleaner energy. I don't know exactly what the metric or terminology being used now is, but obviously the trend has been in that direction.
Yeah, sustainable energy, which includes nuclear. But not natural gas, and it's not net of carbon credits, so it's gross use. So no funky accounting. It's about 56% for the industry globally.
That's a very high number.
Oh, absolutely. I mean, we were in the 30% range 2 years ago. So no industry has transitioned as quickly as the Bitcoin mining industry. And again, we need and want stranded energy. And there's a huge amount of stranded renewable energy available because there is lack of transmission. The single biggest factor limiting the US and its ability to transition to clean energy is lack of transmission. And that's because how the utility model is created. The utilities have no incentive to add transmission because it's hugely capital intensive and they don't get paid enough for it.
So to be clear, you're talking about lost energy as it travels over long distances from the plant to where it eventually ends up being used. Is that correct?
There will be very interesting marketplaces that will sit and trade this energy because at the end of the day, it's just electrons. When you get a little bit of Bitcoin mining in every single battery, every EV, things like that, you now have a hugely decentralized Bitcoin blockchain where the cost of energy to mine is not a factor in whether you're doing it or not necessarily. And so now you have the long tail. You'll have utility scale miners like ourselves, and then you'll have this long tail of space heaters sitting in a home, a battery power wall. These are very interesting potential new businesses for the Teslas of the world. And I think we're going to see this orthogonal competitive competition for hash rate, which is going to be these tiny little devices. It's, it's like you think about the internet, the long tail, we're about to see the long tail of Bitcoin mining start